already. I realized that you probably didn't hear me because I was muted before that. Let me start again. Welcome you to our live trading room here at Admiral Markets. So glad that you can join us on this Wednesday, 28th of August. As you probably realize, we're going to take a look at the Forex markets, the charts, see what the currencies are saying to us in just a minute. But before we do that, we're going to take a look at this risk disclaimer, explaining that trading forex exchange and financial markets in general is considered high risk and may not be suitable for all investors. Please take advice as an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So I do thank you for your attention on that. So I do hope that you hear me now. And once again, welcome to Admiral Markets. My name is Chris. Today we're going to take us various types of trading, intra-day and swing trading, and maybe even position trading if we find something interesting. Tomorrow we have intra-day trading, but also educational webinar in the evening, European evening time. We're taking a look at breakout strategies today, primarily, but also maybe some fibs, retracements. Make sure to take a look at Admiral Markets in social media, Facebook and Twitter. And we're going to take a look at the calendar in just a minute, but before we do that, I do think that you should be able to hear me now. The sound should be the same as always. Is it on your end, Exit, maybe? I'm going to check if my Admiral friend Michael is here.
Hello, good afternoon, everybody. Hello to everybody, or good morning, I would rather say. Thank you very much for a very lovely introduction, Chris. I'll now transfer the spotlight on my screen. There we go. Hello, everybody, once again. My name is Mikhail Onokhov, and I'm a client relationship manager. Okay, I hope that we are all set now. We had a bit of a problem with the sound, but that's what happens when you do live sessions, I guess. Sometimes you just have to deal with stuff happening which is out of your control. I hope that you can hear me all okay. Once again, my name is Mikhail Onokhov, and I'm a client relationship manager for Admiral Markets. You have my email over here, my telephone number here, and this is my Skype, mikhail.onokhov. I received about 7 invitations yesterday. I hope we can keep all the numbers growing. If you have any questions, I'll be more than happy to help you. Today I wanted to talk to you about a very interesting topic. I wanted to speak to you about decisions. Your success in the financial market is always determined by the decisions that you make. However, different financial activities require you to make a different amount of decisions. In some circumstances, all you have to decide is which trust fund will manage your investment. Some decide to construct their own portfolio and are faced with choosing, say, 20 different types of equities to suit their long-term investment objectives. Some decide to actively manage their portfolio and adjust their investment from time to time to remain either beta neutral or heavily beta exposed. Forex market, however, is a Cadillac of decisions. You are faced with a huge amount of decisions every single hour, minute, and second you spend logged into your MetaTrader. What currency pair to choose? What limits to set, if any? To close a position with a small profit or loss, or leave it open expecting the market to make you a favor? There is no other financial activity that would put your decisions-making skills to a test quite as often as Forex will. In fact, you are faced with an important decision as soon as you decide to register. There you are, typing in your name and email, when you're kindly asked to decide which account type you want to open. Try to remember your first time in Starbucks. You came in for a coffee that is pretty much all you wanted. Suddenly, you're on the spot and you have to choose between hazelnut cappuccinos, vanilla lattes, and chocolate frappuccinos. Each of them comes in 3 sizes too, and you cannot get a medium or forget about a big coffee. It has to be a venti or a tall or something else. The first time I was in Starbucks, my embarrassment lasted for 15 minutes. There were too many choices. Later on, I went to Subway for a sandwich, just a sandwich. Needless to say, I was late for work for about an hour. Some Forex brokers do the same, and after you have typed your home address and your email address, you must then choose between 14 different account types when you want to register and trade Forex. This is not going to happen at Admiral Markets. We at Admiral Markets always have your best interests in mind. Therefore, we decided to keep it simple, short, and sweet. You get to choose between a standard and a pro account. The choice is not difficult, but it's very important. Therefore, I decided to take this time and explain the main difference between Admiral Standard and Admiral Pro. First of all, you must consider your financial objectives. If you are new to Forex and would like to see if you have what it takes to make it as a trader, you don't have to think any further. Standard account is the one for you. The minimum deposit starts at just $10 and all of your needs will be accommodated. Admiral Standard gives you an opportunity to trade currency pairs. We'll give you 30 pairs to choose from. You'll have an opportunity to trade commodities, indices, and shares. Our spread on major pairs starts at just 1 pip. And for, say, Euro USD, it will stay 1 pip for entire day time. And the leverage is up to 1 to 500. Meaning that no matter how small your deposit, you will be able to enter into large trades on a Forex market with the sky being the limit of your potential profits. A pro account is different. As the name suggests, it is designed for Forex professionals. If you are keen to describe yourself as a Forex professional, this may be very well account for you. Needless to say, you need at least $1,000 to open such an account, but it should not be a problem for a Forex pro, or should it? The first thing you will notice, the pricing is different. Admiral Pro pricing is reflected by fractional pips, and the spread starts from 0.1 pip. You will have 27 pairs to choose from, no CFDs. So this is a main difference. This is how I would describe the main difference between a Pro and a Standard. This is a beautiful production car. This is a Porsche 911. It's fast, beautiful, very, very good car. Think about it as Admiral Standard. This is Admiral Pro. It's the same car basically, but it's a sports version. So we took all the extra parts out to make it go faster, and then we charge you a little more. So you can do the same thing with your accounts as some rich people do with their cars. They have this car to go to the shops. They have this car for the racetrack. So you can have a standard account to trade your CFDs, and then you have a pro account to trade on currency. So those are your two main choices. The good news are neither of those choices will result in any financial loss. They're not even final, you know. Once you have your account opened, you can open up to 10 different trading accounts. And you can do everything I just told you to do. You can trade your DAX index on your standard and then go to your pro to trade yen versus dollar. The choice is always yours. What is important though, we made it our responsibility to at least one of your, to make all those choices available for you. I hope if you had any questions about standard or demo, they have been answered. If not, here's my email address, my phone number, my Skype. Please add me and ask me them in person. I'll be more than happy to help you. It has been Michael Onahoff. It's been a pleasure again, guys. Have a nice day, and I'm pretty sure Chris is going to dazzle your minds with great live sessions again. Thank you very much. Goodbye.
Thank you so much, Mikhail. I hope that everyone can hear me a bit better now regarding the microphone. I think that my headset was not working all too well, so I hope that you hear me a bit better. Let's take a look at the Forex calendar. So thank you so much, Mikhail, first of all, for that great introduction here on Admiral Market Options. We're going to take a look at the calendar right now and see what is going on with that. Okay. Internet seems to be a bit slow. There it is. We will go to the analytics, click on Forex Calendar, and we can see that there's no substantial red tagged or impact news today. Actually, it's quite a light agenda. We do have some Euro news on Italian retail sales, for example, but that's all light impact. Okay, let's move on. We do have a USD pending home sales, by the way, but that's in the New York session. Let's move on to our charts of today. I was taking a look at the dollar index. In fact, to get a feel what the dollar could do, of course, very important for us. I mean, we do primarily look at a lot of dollar pairs, so the dollar index, very important. And I was just observing that basically, if you look at the weekly chart, we're definitely at a support level. Not only is there a green trend line, of course, which could indicate that support, but also there's a weekly support level around 80.50, where we'll draw this this horizontal line, in fact, right? A bit lighter green, around 80.40, 80.50. That too, of course, is a weekly support level. The dollar index is right there. Last week we had a doji, in fact, and the lower wick was actually a bit higher or bigger than the top of the wick, indicating a bit more buying pressure than selling pressure. Although, of course, it's marginal, it's still a doji. So definitely dollar index at a bouncing spot on the weekly chart. But let's look at the daily chart now. And on the daily, obviously, we see this downtrend channel, right? So downtrend on the daily and 4-hour chart, but the trend is bumping into major support. So that's always a battle of giants. Who's going to win? The momentum on the lower time frame, or is it going to be the higher time frame support levels? All right, that's always like that. Currencies will be going from one support to another resistance and then to the next support, and eventually we'll get a break. But if there's a possibility for a currency to move within those support and resistances, it's going to do that. So especially in this case, for example, I would say personally the likelihood of a bounce here, even if it's to retrace part of this downside, is likely. If not, eventually all the way to the top, back to the top, and then probably we'll respect that top again, and maybe we'll break or move back down again. All right, that's something of a later fashion or later decision, something far away from here anyhow, right? So I do think that the bounce here is likely, but obviously it's not happening fast. It is taking time, because if you look at this few days here, it easily adds up to 2 weeks, right? So that is quite a significant time factor there. And that holds true. The dollar hasn't done much, really, the last 2 weeks. And if you've been trading the dollar, you probably could only scalp it because it hasn't moved. What really moves have been the Aussie and the CAD the last 2 weeks. And luckily, you probably know that because you probably were here earlier in our sessions. And you know, I took again an odd trade in the afternoon yesterday, and that's doing very well. So those were the most opportunities last week. If you were trading the dollar, the space was quite limited. But I do think that if you look at the setup, at one point we're going to break. Now that could still take 1 week, maybe next week we'll break, maybe this week, maybe 2 weeks from now. You never know how long it takes before it breaks. But I do think we're in a bouncing spot. Now, if we don't bounce here and we just keep on rolling down, all right, well then I'll have to change it, and I guess we're moving, you know, down. We have to be careful of the support level. But once we break this trend line, we do have a bit of space here. Once we break the horizontal level, we have a bit of a space there. But the space is very limited. The space to the upside, definitely bigger, as you can see. So I'm looking at the 4-hour chart now and estimating that if we break this downtrend channel and we break these last resistance levels, this is the 4-hour resistance, this is the day chart resistance, those are key levels still. If we break this downtrend channel and those levels, the chance of dollar strength is high. So that's something. Also here on the 4-hour chart, you can see a potential for inverse head and shoulders as well. So that top of the trend channel is in fact also a neckline. So that's my analysis on the dollar index. I'm expecting dollar strength, but we have to be patient and wait for the breakout to get that confirmation. All right, so that'll be interesting. If it does break, I do think we can get a pretty interesting, pretty interesting moves on the dollar. That would mean pound dollar down, Aussie maybe continuation down, because the Aussie dollar is already in a downtrend. If the dollar gains strength, what do you think the Aussies are going to do? Exactly, it's already in a downtrend. With Aussie strength, with dollar strength added to it, it's just going to fuel that downtrend most likely. But the pound dollar also showing some reversals last week. Major weekly reversal candle, or at least a bearish candle. The euro dollar is the only one that isn't following suit that much as yet, but if the dollar will break to the upside, it would eventually also follow, right? Now the opposite, of course, would be true if we break this support line. Then again, I'm not too interested in a break of that support line because the trend line, excuse me, because support is so close. I really want a break of that bottom before dollar shorts are really getting interested. This is really a tight space, okay? Alrighty, good morning everyone. Go to Kaylin and Bogdan. Let's move on to our currencies and see how they're set up. Whoa. Sorry about that. Let's take a look at the euro dollar first of all. Good to see you, Bogdan, by the way. Yeah, that's good to take a look at the dollar index indeed. Absolutely. Always useful. And we could do that every day, in fact, but you know, sometimes in this case the dollar really didn't do much anyhow. Once it gets moving, we'll take a look at it for sure. Let's see. Well, you can see the dollar index really very accurately reflected in this euro dollar because it's not going anywhere, right? Look at this 1 hour chart, excuse me. It's has no momentum, no direction. It's just sideways. Now, it's even difficult to trade as a range because, in fact, if anything, it's more or less like a triangle. Very difficult. There's not much to trade here. I mean, if you like picking spots and bottoms, tops and bottoms in a tight range like that, that's great, but it's very tight. Now, in fact, if anything, it would be interesting to see if we can break the 134, maybe up to 134.50. That could be potential space here. Maybe. Or if we maybe break this bottom in here and this triangle, there could be some downside space right in there. You see, as a trader, you're always looking for spaces. Where could the currency move in an impulsive fashion? And it's not going to be, you know, every single pip is going to be a trouble. You want to have a space where the currency can move fast to your target. That's the kind of trading that you prefer, because why? Well, if the trade is struggling, first of all, you're going to have psychology problems with hanging into that trade. Trading psychology is going to be very difficult. Second of all, if we book our profit fast and close our trade fast, well, then we can trade again. It means more opportunities. Our capital is not stuck in the trade, right? So there are definitely advantages about that. Well, we can take a look at different time frames indeed. Let's start with the day chart. Yeah, that's pretty interesting day candle indeed. The only thing you have to realize is that that candle itself is not majorly important. It's not as if it's a reversal candle. If this would have been a candle at a bottom near support, it would have more meaning in my opinion. This daily candle is not worthless, but it's not as meaningful as in other cases, in my opinion. It's just sideways here. 4-hour charts, engulfing twins, but as I said, right back to resistance. This 134 level is a major resistance. We're back at it again. We couldn't break it. All right, let's take a look at our other indicators here, because we're going to take a look at maybe some intraday potential if it's there. If we think that it has potential, we can take a look at it. So I'm going to take a look at some other charts that we have on the euro dollar here. For example, this Camarilla indicator. Let's see what it says. It's indicating space, as I said, above here. When we break this top, basically confirming that if we break 134, we have some space up to 134.50. In fact, the Camarilla is saying 134.12 to 134.33. That's only 21 pips. The Camarilla is absolutely, beyond any doubt, confirming the tight space here that we have on the euro. There's only 20 pips between H3 and H4. Sorry, I should be looking between H4 and H5. Wrong ones. H4 and H5 is 34 pips. Okay, that's a bit more. 20 was very tight. H4 is actually, in fact, at 134.30, so it's a bit higher than what I was thinking is crucial. So anywhere above the H3 short, probably, we have a R2, let's see, what is it, R1 right in here. So anywhere above 134.20 probably is the best longing, up to 134.70. Tight space up there, but a bit higher. As you can see, the breakout to the downside below 133.50 here, L4 down to L5 is a 35 pip space. So that's the spaces on the Camarilla. If it's a ascending flag, well, it's actually an ascending triangle, ascending wedge. Just there's only bull or bear flags, by the way, but maybe it's more a triangle in my opinion. It's more like the tops are not flat enough, I think, but you could see it as an ascending, maybe ascending. To me, it's more a triangle, just because of the fact that it's more like this shape. Now, we did have some momentum to the upside here, obviously. So we're stuck in a triangle right now. So if we break to the upside, that is still with the bigger momentum of the trend, right? If we break to the downside, it would actually be a reversal trade, wouldn't it? Obviously. That's, you don't need to know, you don't need to have a PhD here to understand that, right? Obviously, we're making higher highs, higher lows before that, although the angle was quite weak. So any down trade is a reversal breakout, right? Which could be possible. I'm not saying it won't happen, because we can see that the dollar is at support, so that could happen. The only thing is that if the dollar breaks to the upside and gains strength, the other currencies, maybe the Aussie or pound, could be better to trade, could be better to capitalize on dollar strength, because they're better set up. The Aussie is already in a downtrend. The pound has showing more reversal signs than the euro. In fact, if dollar is showing weakness, the best currency probably to trade that dollar weakness is euro dollar. So relatively speaking, if I compare euro to pound and Aussie, the euro is the best for the upside, while the odd and is best for the downside, and second best would be pound. Okay, I hope that makes sense. Where you can the indicator, we have to Google it. You can, I guess, Google download Camarilla is the name. Let me write it down for you. I think it's like this, or it's that. Let me check. Oh, it's actually with the A, two A's. Kamarilla, sorry. Both are wrong. Kamarilla. Alrighty. So anyhow, that's the space that is on this Camarilla indicator. Let's take a look at something else. Let's take a look at this view here. We can see this is the 15-minute world. We're getting some downside here. That's because currency couldn't break this major 134 level. Is respecting that right now, 133.72. We have more or less in the short-term time frames. We do have everything red regarding our stochastics here. Can you see that? 3 stochastics up to 1 hour. Everything is red. On the right upper corner, only the higher time frames are still green. So there's a bit of a mixed picture there. Do you see that? Let's move on to our Fibonacci Confluence indicator. You can see there's a lot of support down here still. So obviously we would need to crack that, break through it before you can think about reversal trades. You see that? It's really like 10, 20 pips away. You already have major Fib Confluence support. Now, it's a bad practice, in my opinion, to short right into that support zone. I don't think that there should be any doubt about that. If you pick the 134 level, great job. Hang in there, hope that it breaks, or take your profit here. If you're not in by now, then it's too risky. If you don't understand that, no problem. Just let me know, and I'll give you more explanation on that. Okay. Let's take a look at. Let me take a look at quickly at this Elliott wave indicator. See what that's saying. It's indicating that this could be a top and this could be downside from here. So we could get the break. We could. That's what Elliott wave is saying. But if we look at our indicator here, we're definitely in an oversold, relatively oversold situation. On the 4 hour here, 1 hour is, let's see, yeah, 1 hour is a bit of a mix. Could be a struggle to go down because we're still above support. Let's take a look at this view, our trend indicator. See, trend is still indicating that the euro dollar on the 4 hour chart definitely above the moving averages. Green candles, those are momentum bars. So if it's green, that means it's uptrend. If it's red, it's could be in a downtrend or a retracement. Okay. Let's take a look. Day chart definitely green, so you can see still everything very greenish. Okay. Let's take. Oh, where did my chart go there? Alrighty. Let's take a look at this. This is a band of moving averages, and in my opinion, looking at this band, you can see any dip below it was still retracement. So this could be a retracement still too. But if we break that support, then probably the reversal is in place. So 133.23, 133.25 is very key. key level there, in my opinion. 40 bulls and bears. Day chart, you can see price still way above that band. Definitely very bullish. So if anything, a break above 134-ish, 134.20, as we know, is with the trend breakout, right? Just a confirmation again. Day chart, it's more of a day chart is more of a bad divergence. Well, you're right, actually. No, sorry, it is full divergence because we did break the top here compared to that top. I hardly noticed it because it was such a small break, but indeed we pushed through it. Obviously 50 pips here. And if you then compare the tops there to each other, it is divergence indeed. If you compare this to that and then the prices to each other, obviously we have a higher high, indeed. And we have a higher lower high here. So that is divergence on the day chart indeed. That adds another factor to being cautious to the upside, but downside still too early at the moment, right here. Depends where. If you took the 134 resistance, great. Otherwise, have to probably wait for a break of 133.23 or an earlier trade when we break the trend line below 133. What is it? What's the camera indicating? 133.50. Tight space though. Let's take a look at the pound. Let's see what the camera is saying here. $156.10 breakout. I totally agree with that. From a technical point of view, I had actually a line on my chart with this right here, in fact, because that is a very important 4-hour resistance. 156.10. If we break 156.10, we could have that space to the upside. We still want to be careful with the upside because if we do move up here, H5 seems indeed prudent and conservative because any move up could still encounter resistance where we retrace this top and then move down from there. So there's a very tight space here between the H4, excuse me, and H5. Downside, well, let's take a look, indicating the L4 is at below 155 down to 154.40. So that's a 50 pip. You see there's more space on the pound than the euro. That makes sense too. That will be with the that would be already with the trend, in fact, because if you look at the 4-hour chart, the 4-hour key support level is here. If we break that, we're actually reversing on the day chart. This is already a downtrend on the 4-hour chart. It's just that on the day chart, there's some reasons to anticipate support around here, which we did bounce. So if we break that daily support, then we've moved into a downtrend on the day chart on the pound as well. So upside here, downside there, that makes sense. We'll keep an eye on that as our session progresses. Let me take a look at the pound dollar on the normal charts. So yeah, that's about it, I guess, with regard to the euro, first of all. Let's move on. Any questions on the euro? By the way, David, Bogdan has a link there for you. I don't know if you can see the link. Maybe I have to paste it there. Trying to paste the, give me 1 second, I'm trying to paste that link. Oh, you have it. Great. Okay, you got it. Good. I wasn't sure if you can see each other's chat. Maybe you can, I don't know, but apparently you can because you already have that link, so that's great. Thank you, Bogdan, by the way, for that. That's great. Oh, you found a different link already. Okay. I guess it's a different... No, it's the same source. Okay. Anyhow, that's good. Everyone has that. Yeah, Kaylin, that was... Yeah, Aussie New Zealand is on my list as well. Great spot there. I had it on my list. Actually, I have AU New Zealand, Euro New Zealand on my list. So good job, Kaylin. I have dollar Swissy, dollar CAD, and Euro CAD as well. And I'm in Euro odd, but those have moved already. I don't know how interesting it is still at the moment, but so those are on my list. Where's the pound dollar? Right in here. So pound dollar had this rising wedge, of course, indicated by these purple lines. But the reason why we could be at support on the daily chart is that if you look at this daily chart, of course, is there's a support around 154.20. When price dipped to 154.80, it's getting relatively close. It could be even a fib if we put a fib here. The chances that we'll bounce at 786, for example, as you can see, always high. You see that? So that's why I bounced there. But if we do break this level now, then we're breaking this channel. If you connect the bottoms on the pound dollar, we're breaking that channel. That will be a first indication that we are moving to the downside here on this pound dollar. Or extra confirmation, I should say. All right. At the moment, it's in the middle of nowhere. All right. We could bounce here, hit the trend line again, then move down. We could continue down, then do the same. Or, you know, there's no, I wouldn't want to take a trade to either direction here. I don't think it's worth the risk. So I suggest to move on. And let's take a look at that Aussie New Zealand. I think it is an interesting setup, and we'll work through all these setups and potentials one by one. Let's take first a look at the Aussie New Zealand. Alrighty. Well, obviously, the only thing you can say here is one thing. Wow. What a downtrend, 2,000 pips. Now, I know that doesn't seem as spectacular as maybe the pound odd and the euro odd, which have actually moved 3,000 pips, I think. So it has been great trading with these pairs the last half a year. Just like the half year before that, it was great trading the yen, because the yen really was moving a lot. So the AU New Zealand, a bit shy compared to the others, only 2,000, not bad though still. So we can see that lasted almost a year now, more than a year. And of course we've had some upsides in between. Most recently, since mid-March, we've had a very, very steep downside. If you look at the angle of price, you can obviously how steep that is. We have a moving average here of 34, but I think if we add a moving average of 12, price would still be below that. Let me check. All right, it's a bit not a good color. 1 second. You see this thin black one here? Most of the time price was under that. So it indicates how impulsive price was moving to the downside. The price action was moving at a very steep angle. Now, this is one of the first times that we've had a higher high on the daily and 4-hour chart. You see that? So it could be an indication we make a bigger retracement back to, for example, an equilibrium resistance line somewhere in here maybe. You see these tops here and bottoms here, for example. On the weekly chart, the next resistance level is all the way here. So it could be anywhere in that zone. Price could easily shoot up there, find resistance, and then move down again here. So we have that potential green space here to trade right now, or sometime soon. All right, let's zoom into the 4-hour chart now. So this is the 4-hour view, and you can see that pretty aggressive up move here, and we're now correcting to the downside. Looking like a bull flag. Bull flags are continuation patterns, all right? Especially if we have an impulse like this. If we break, we can expect that. If we measure top to bottom of that impulse, it's 112.70. It's approximately 320 pips. If we then add 320 to this bottom potentially, we're getting 117.70. Where do we have our line? 117.50. All right? That's possible. That's a good move. If we then zoom into the 1-hour chart, you can see that correction a bit better. So if we put a trend line here, like that, and a trend line like that, you can obviously see that bull flag a bit better. Now, personally, I'll be looking for a break of that bull flag. So what I want to see is price move to it. I want to see it respect here on the 50-minute world, and then the next break is the bull flag break I want to take. If we don't respect that line on the 50-minute world and we break through it, I'll let it break, wait for hook back, and take it on the hook back. Why is that so? Does anyone have an idea why I would want to do that? I'll show you what I'm planning to do. Just in case you're multitasking and you didn't look at the chart, I'm drawing a visual what I'm looking for. That's scenario 1, the green and red. Scenario 2 would be this. So does anyone know why I would want the 50-minute world to respect to respect that trend line? Any ideas? So I'll share my thoughts in a minute or less, but I'm just curious if someone has, yeah, we got some ideas already here. Adrian says to get a smaller stop loss. Okay, that's a great idea, first of all, Adrian. Good job there. That is one of the things I'm looking for, indeed. There's another thing, and I'll explain that too. Now, first of all, indeed, smaller stop loss is very important, because if we get that respect and we get that bounce, we can enter on the 50-minute break. I'll make it pink so we can see it. We can enter on the 50-minute break right in here and put our stop loss there below the new low, right? So that's, first of all, tight stop loss here on the 50-minute world, and we catch the breakout. And we want to take probably 2-to-1 trade or something like that. And if it tops out somewhere in here, we can wait for a hook back and take it again, right? So that's one thing. But the other thing is that if a currency moves from 114.60 to 115.20, 60 pips in one shot, and it keeps breaking, the likelihood of a sustainable break for another 60 to 80 pips without a retracement is diminishing by the pip. The likelihood of maybe another 20 pip move before we get a retracement is high. So I might as well plan for that retracement and let these 20 pips go. First of all, indeed, our risk is way here. Oh, now I lost my drawing. Our risk is way here, and we only have maybe a few pips left. Now, in some cases, it could move more, but realistically speaking, on average, a currency that moves that much doesn't have in one go would not move that much before it retraces. That's why I would rather see the retracement here. If it retraces, the currency has regained its breath, it's ready for a new move, and the next break can make another 60, 80 pips. That's what all I need on a 50-minute chart to get a great R2R, as you can imagine. Does everyone see this logic? It's kind of the, if you're loading a barrel, or I don't know how to give a good example, but you don't want to, if the currency has moved too much, it's out of energy. Maybe energy is the best, right? It's out of energy here. And when it's retracing, it's gaining energy again, and that energy gain will be released when it breaks. If it's releasing its energy, when it's moving, it's releasing energy basically, and when it's releasing energy and it's reaching a trend line that still breaks, the energy is dying. It's better to wait for respect and then to break, or if it does break, let it go and wait for the hook back. Does everyone see that logic? Why that is better? So it's better from a reward to risk point of view, but also it saves us time and energy. It saves us basically the R2R, time and energy, and also we take the trade at the better moment, okay, with more higher statistical odds. If it's a false breakout, on top of that, if it is a false breakout, we are able to avoid the trade, right, on top of that. Because often enough, if we do push up, we would get, for example, on the 1 hour chart, you can check the 1 hour chart, and if we get a wick above it, for example, if we push up and we have a 1 hour wick like this, what does that tell you? Not much, right? It could be a false breakout. So then we avoid the trade and wait for the next breakout. Or maybe the currency moves back in and we avoided a loss. So that's the extra advantage indeed, Kalen. Good thinking. So you want to check the 1 hour chart as well to see what kind of break it looks like on a 1 hour chart. You can do that with everything. If you're trading 1 hour breakouts and you want to see if it's sustainable, take a look at the 4 hour candle. If there's a major wick, 80% is a wick, well, there was a lot of selling pressure. So let me take a look what Kalen has. Kalen is looking at a long entry between 114.16 and 113.96. So Kalen is looking for a deeper retracement around here, back to this broken blue trend line. That is possible. You never know. Currently we bounced off a 382 fib. So Kalen is basically looking at the 50 fib or 618. That's always possible, but it doesn't have to be. We could bounce off the 382. So if we do bounce off the 382, we either want to indeed take it around these fibs if it does retrace deeper, but if it doesn't, we want to be prepared to take that trade in here. All right, and I will be trading it two ways. On a 15-minute break, I'll probably take this trade, and on the hook back, I'll take the next one up to the minus 272 target. That's if it doesn't retrace to the 50 and it does bounce off the 382. The stop losses, well, it depends. The stop loss of the 50-minute world, if it makes that hook back, as I said, the stop loss would be under the 50-minute stop, wherever that is. And the entry would be upon the break, right? That's the risk. We'll be targeting the top at first for the 50-minute world, okay? That's like a 2-to-1 probably. Then I would re-enter on the hook back and on probably the 382, 50, 618 fibs with the stop loss below the swing low and aiming for the minus 618 and minus 16118 and minus 1000 fib targets here of that new fib that we don't have yet on the chart. We first need the breakout and then the pullback, right? So stop loss would be swing high, swing low, or the 50-minute fractal. okay, for the 50-minute breakout. So 50-minute breakout world, 50-minute fractal, 1 hour swing high, swing low, the bottom of the 1 hour swing low. Be aware of the bigger targets though. Even if you're aiming for smaller targets, always be aware of this minus 272 at 116.80 and the 117.50 area, okay, because those are the targets, bigger targets, bigger resistances. Let's take a look at some other currency. Let's take a look at maybe the Euro New Zealand. Let me take a look at that quickly. Alrighty, Euro New Zealand, as expected, is pushing through got a thick red line at 172, but the break isn't happening that impulsively. It is slow but surely, as you can see, inching forward. Not that convincing as yet. I don't see any pattern that I would say that is worth trading at the moment, okay? If we do punch a bit more through it, more convincingly, and make a bull flag, that would be different. Keeping an eye on it, I'm keeping an eye on it, but it's not set up right now in a position that I find interesting. The Euro odd break was great. Did anyone, I'm sure we talked about it, the Euro odd yesterday, but I can't remember exactly, but I'm sure we did. I hope we did because I took the trade in any case. This was a clear break of the triangle, and well, we're in an uptrend. We had an impulse triangle. If we break that, what do you think happens? Uptrend, up impulse on all time frames. You get continuation. That's exactly what happened. You see, with currency trading, it's not so much what we think. It's the currency really has a roadmap that we just need to follow. It's speaking to us. We just need to understand its language and see where the best opportunities lie. It's more like a roadmap reading than thinking. It's looking at a map and trying to get the best opportunity in your areas, okay? So you're looking at the map and saying, okay, what is the quickest way to get from A to B? Where do I want to hop on the bus? It's just looking at the map, basically. We're map readers. The currency is indicating to us what the best trade are, and that's what the Euro odd was, okay? Was a very nice fib retracement here, 50 fib, 32 fib, right at the minus 272 target. I'm personally aiming for all the way here at the minus 1618. Why is that? Well, you can see another fib right here. That's the first impulse with triangle. The triangle barely hit the 382, or it did, sorry. No, just barely. The target of that is the minus 618. Now there is some confluence here. The 150-50 area could be the resistance area too. So I'm ignoring that fact. If the trade goes through that, I'm fine. If it doesn't, I just take a break-even trade. That's fine. I realize that this could be a turning spot as well. It could be a target because we have two confluences there, fibs, but I'm aiming for the next fib. Okay, so there's confluence in those fibs there at 152. That is my target. That would be 305 pip trade. Moreover, if you look at the 4-hour chart, no, day chart, and fib this up move, you can see there's a bigger minus 272 at that 152 area. So now, of course, we can see that there are targets, but there are more target confluences at 152. You see that? There's a minus 1618, a minus 618, and a minus 272. If you are in that trade, great job. I'm hanging into that confluence. But I am at break even, so I'm risk-free, and if it works out, it's a 305 pip trade there. Alrighty. Now at the moment, I don't see anything as yet. We're at a 272 target. If it maybe dips here, I don't think we'll move that much lower. Probably these tops could still be support. A bounce there could be interesting. But we're way up here, so we'll have to wait for that. Let's see how that pans out. Let's take a look at something else. Basically, all the odds are similar, so I'll keep those for later because the odd dollar and the pound odd in a way is similar. Let's take a look at the Euro CAD and Dollar CAD because we talked about the Dollar CAD yesterday. We can start with that. Well, the Dollar CAD didn't bounce off the 236 fib like what it was doing yesterday. I did say, though, that there is a potential for it to move to the 382. That's exactly what happened. We bounced exactly off the 382 fib. And personally, I don't know, I closed the trade for small loss. Why did I close it? Well, first of all, the wick here was a significant price action signal. That's point one. The other thing is that we had, basically we're going sideways for 4 hours. So too much time factor. It took too long to move. Also from an Elliott wave perspective, I knew, you know, if you don't like Elliott wave, that's fine, but sometimes it does help. I knew that there's always a potential of an A, B, C like this. Sorry, one more time. An A, B, C down to the 382 fib. If it takes too long in here, too much time factor, then there's that likelihood is increasing. Because what you want to see is a break and continue to indicate that this was the end of the retracement. If it takes too long in here, then the likelihood of one more down before it moves up is higher. All right, so those factors, those three factors were for me enough to say, okay, that trade is not going to develop, which I understand is difficult for you. That's why it's good to learn from these sessions as well, because the trade management in some cases, it's tricky to explain from my side all the different scenarios that can unfold in the future. There's so many scenarios that could unfold that's difficult. I'll try my best, though, to go through different scenarios and situations so that we do discuss that as much as possible. Okay. The time factor, there is a webinar on time factor. First of all, I'll show you that. Okay. On education webinars. Oh, then you have to go to video archive. Importance of time. It's actually the first one, the first webinar I did. That's funny. Thank you, Alessandra. I'm glad you liked that. Alessandro liked it, so he's vouching for me. Take a look. But basically, it just says that if it takes too long, and of course, it's not an exact science. Definitely never ever will be. But it, I think, could give you some indication after, for example, 4 or 5 candles. If it doesn't break, you know, the likelihood of a move continuing is decreasing. It's never 100% though, right? And it depends and varies from case to case, of course. But I think it will give you some understanding of time factor. If you want to avoid the importance of time factor, probably using range bars could be a good idea. Otherwise, most traders focus on price, but not much on time. But I do think it's useful. If you use time frames as your analysis and not range charts or tick charts, then I think there is value in looking at time. Okay. But anyhow, I don't want to elaborate too long on that. The webinars, that's why we had those webinars there. So now I have this trend line though, and basically, if we hit that trend line here, the same as the odd New Zealand. If we hit the trend line, respect it, move up, that's great. And I would be willing to take this on a 15, no problem at all here. It's a good trend line. But I'm not going to take it if it breaks in one shot. The currency has, especially for the CAD, it has moved, in that case already 50 pips. That's quite a lot for the CAD. I want at least a 15-minute, small 15-minute bull flag. Doesn't have to be long. It could be 2 hours, that's all. And then the next break I'll take. Stop loss here, below the bull flag. Entry above the 15-minute fractal. Targeting probably something in here, around 105.60-ish. Well, maybe the top, in fact, which is around 105.70. But I do want to check if the R2R is there. I want to preferably 2-to-1. If it's not 2-to-1, I might aim for a bit higher. Okay, 2-to-1 is probably the optimal. So that could be interesting on the dollar CAD. The Euro CAD could be the same. Let me take a look. That might be breaking as we speak. Let's take a look, actually. You can see trend line hit, trend line hit, trend line hit. Another trend line hit. That's the fourth hit. That's good. It respected that trend line, which means if you look at the 15-minute world, we had an up move. We're getting a mini bull flag here on the 5-minute world. So I'm interested in this next break. And in fact, I'll be willing to put a pending order here probably, but we'll have to see where this turns. Where it turns, that's where we'll have the stop loss. You can see that it's, at the moment, price is actually moving down. So pending order wouldn't make sense anyhow. We'll need to see a bounce. Once it bounces, then we could put a pending order there, because then we'll have a place where we can put the stop loss and put the entry. Not so sure, because we just had a new low. We just made a new low on the 5-minute chart. So once that happens, it could happen any minute. So we'll take a look again in a few minutes. 5 minutes from now, we'll take a look again. Okay? This is looking very interesting. This could happen within the hour, because with the odd New Zealand, the difference with the odd New Zealand and the dollar CAD and the the odd New Zealand and the dollar CAD is the fact that we still have to make that up move, respect it, and then break. So that's some time factor is going to take place. Wow. Don't know what happened there, but the Euro CAD just really shot up within a minute there. Interesting. So now it makes more sense because we're moving up. This could be the low, which is at 140.46. Stop loss below there. The 50-minute high is at 60. Now, is there some news? It looks kind of volatile somehow, more than usual. But Florida, by the way, all the attendees are muted. You can write though through the chat, okay? Because otherwise it would be, I guess it would be too complicated with that many people in the room. So anyone know about the news? Well, anyhow, I still think technically it's a good setup, so I would just go ahead. I was just curious if anyone knew anything about it. So I'm going to put a pending order above here at I always forget that the Euro Cad is a bit costly. That's a shame. Yeah, I think regarding the spread, it's a bit too much for a 50-minute trade, actually. I always forget that with the Euro Cad. But you can see anyhow the potential trade setup. That's the setup I'm looking for on a 1 hour world here, where you have 140.63 approximately stop loss here. So it's very tight. It's only 18 pips, 15 to 18. And if you go for 2-to-1, that's great. That's 36. 105 would be the target approximately. Sorry, I mean 141, excuse me. That's a great 2-to-1 trade there. That's the principle behind it. So that's what I'm looking for the other currencies as well, something like that. Okay, so you have more visual idea of what's going on. Let's take a look at something else. Let's take a look at the Aussie Yen. Okay, we can take a look at that. I just wanted to see dollar Swissy. Dollar Swissy. Kind of reflecting that dollar index, okay? In a way, breakout of this trend line for me would indicate the dollar strength in play that we were looking at on the dollar index, something I'm keeping an eye on. Because if it does break, I do think we have some space to the upside here on the dollar Swissy. As you can see, quite a lot of space. So definitely that trend line, very interesting for me. Aussie Yen, let's take a look at that. Aussie Yen definitely in a downtrend. Day chart, 4-hour chart, all of them on a downtrend. But we have a weekly low right in here at 86.40. We actually bounce off that level just right now. Okay. So definitely downtrend, but bouncing off that major support. So nothing for me to trade at the moment, personally. Now, if you're a level picker, then maybe that would have been a level you like. I don't know. But I'm always looking for with the trend trades. And at the moment, we are in a downtrend, but right at the bottom of weekly support. So for me, there's nothing to do. You see what I mean, Alessandro? You don't see what I mean? Oh yes, okay. Good, good, good. Okay. Goody good. AO showing divergence, yeah, that's possible indeed. Let's see. We have divergence between these bottoms. And these bottoms indeed. So this could be a bounce, could be double bottom. Definitely possible. So if you saw that and you like it, that could be a good trade. I'm not personally a big reversal pattern trader. I'm more a continuation pattern trader. So for me, it would have to, I would need to see an impulse, a higher low here, and then continuation for me to ponder about something else. Euro Yen made the fall yesterday from the top of the range down, so maybe This is the bottom of that bigger triangle, but I do still see some space still to the lower part of the triangle. If you look at this, A, B, C, D, so we still have some space maybe. I'm not sure if we really reached the bottom of that triangle. There's definitely still space for further downside there. Dollar yen, let's take a look at that. That fell to that bottom of close to the pink line there. So that too still has some space. Could be still some space left. Who knows? Difficult to say. Could also be that this is the bouncing area. But if it is, we'll get some confirmation of a hook back. All right. What else to look at? The odd dollar, of course. Where is that? There it is. Odd dollar is, yeah, as expected. 786 was a bounce. Let me put the fib on so you can see that. Florida, the blue are positive candles and the red are negative candles. What that means is that of this particular currency, which is the Australian dollar versus the US dollar, if you see a blue candle, that means that the odd dollar has moved up in value. If you see a red candle, excuse me, you actually have seen price moving down within that time frame. In this case, it's a 4-hour chart. But if I would move to a 1-hour chart, all these blue and red candles would indicate downside or upside of that 1-hour time frame. Okay? So 4-hour chart here, no problem. 4-hour chart, 786 fib, 886 fib. That's where we bounced here, 250, 618 a bit, not that much though. So logically, I was really anticipating that this double bottom wouldn't be really that important because the 886 fib I think is more important. That's what happened. And we'll have to see. It could be that this is the bouncing spot for upside, for a bigger retrace, or is it just a retrace for more downside? That remains to be seen. That's the same question we had with the 786, but the upside was very weak. And when we broke, that was still a good sell, as you can see. Now, obviously, this is in a downtrend with down momentum. So anything to the upside is high risk, high counter trend, and not worth it as yet, in my opinion. Okay. If we break through this bottom and through the 886, we should have space down to 87 and then 85.50. So that's the odd dollar. Basically now, right at the 886, so I do expect some support here. I don't think we'll continue immediately with that downside. So that's a bit of a shame, but we'll have to just be patient with that and see how this Aussie reacts to it. If it makes a bear flag like this, we can take it probably later in the Europe session for a downside, or maybe the Asian session. I don't think it's going to happen now, though. That chance is not so likely. I'm not sure about that, Alessandro. I think the best would be to write support about that, if that's possible, okay? You can use 20 and 40 EMA, Graham. Definitely. I know traders who use that. It's quite a popular or not popular. I don't know if it's popular, but I've heard of that combination, which makes sense as well. This is something different. I'm using 144 and 34 EMAs as well. So let's revisit, by the way, before we forget about it, the euro dollar, what's happening there. What happened because just the candle just closed 1 minute ago, in fact, right? And you know, the euro dollar is great for intraday trading, of course, because we have spreads here of 0.5 pips. So if you're trading with the other broker and it's I don't know, more than that, you might want to consider a move, because this is really very, very tight, just like the pound and odd and many other currencies. But at the moment, I don't see any intraday sell here or long. We really didn't do much the last 2 hours. We're bouncing in a tight range of some 15 pips, right? The last 4 hours. So really, no movement there. Pound dollar, same story. Not sure what you mean there, Florida, with your question. Could you rephrase that for me? So that's nothing going on in those. As we already discussed those currencies in more detail at the beginning of our session. So no need to repeat that. Just checking what happened in the meantime, okay? Euro pound is moving to the upside slowly but surely after the break of that 85.77 resistance, which became support. I'm not a big fan of the euro pound, but be careful of this. It could be a rising wedge, despite the fact that we're moving up. So I would really, if you're in that, I would like to see a break of that to upper trend line for a confirmation of more upside. Let's take a look at this pound Swissy. I just take let me clean up the chart first of all. Could be at that weekly resistance, right? So the pound Swiss was moving up, but clearly couldn't, having trouble with that weekly resistance. Back in a downtrend at the moment, and in fact, could make maybe some channel like this. So if we get back to the top of that downtrend channel, that could be interesting. We'll keep an eye on that one. Or if we would break maybe this lower part of the trend line. Alrighty, let's move on to another one. New Zealand dollar. New Zealand dollar is still fighting against those major support levels. Obviously, don't want to go short right in front of those levels. A break of the support levels would be interesting. I'm looking for a break and then a bear flag on a smaller time frame, and then the next continuation to 74. Okay, right in here, there's nothing. Unless you're a range trader and you want to go long for this as a target with a stop loss below the range, that's the only thing I can think of. I'm not a range trader. If you are, then you probably like this trade, or maybe you don't. I don't know. You have reasons to think it could break this time around. Maybe you see it and think this is already the fourth attempt to the downside. I already had this downside momentum, and we've had this correction. Maybe this time it's going to break. Those thoughts would make sense to me if you were thinking that. So maybe this time it is going to break. If it does break, that's where I'm getting interested. Otherwise, besides that, let me take a look if we missed anything. Pound New Zealand, same thing as the Euro New Zealand and New Zealand dollar, waiting for the break of the top. Gold is really moving up high. Probably the next target is the minus 618 at 1450. Euro Swissy looks like it's right at the bottom of this massive sideways move. Let's see if the euro can rebound here. And odd CAD. Sideways for now, right at the bottom. Let's see if we can break that support level, or if we're going to bounce, maybe to rebounce back to the top. So if you have any questions, or if you want to see any particular currency, always let me know, but especially now because we only have a few minutes left. I do not trade during news releases. There's a question from David. In fact, if anything, I avoid taking a trade during or before a news release, depending on which news release. I mean, significant red impact news then. And if it's an NFP, I avoid trading the whole day. But there are plenty of traders who actually trade the NFP, right? So depends what you find more comfortable to trade and what suits your trading psychology. We have, in fact, didn't we have a webinar on, let me take a look. Most recently, I think we had something on that. Let me take a look here. Developing strategies. That actually dives into, what type of strategy you want and how that's linked to your trading psychology. All right, so let me go back to the euro dollar here. Because we've done our wrap up of the currencies. Before we go to the euro dollar, let me just quickly take a look at, just out of curiosity, the dollar CAD, not breaking, euro CAD, not breaking as yet. Okay, let me take a look at this this view mode again. I'll keep an eye a bit on the euro dollar. Okay, see, just a few minutes. Maybe there's a scalp trade to be caught still. We still have approximately 1 hour 50 minutes left in the first 3 hours of the London session, right? And Florida, the reason why those 3 hours are the best is because there's the most movement, usually, on average. Now, it's not always movement, as you can see, but on average, those are the highest. The most pips moved are the first 3 hours, or in fact, the entire London session. But it does quiet down during London lunchtime. So those are the best, especially if you're intraday trade. If you're trading intra-week or intra-month, that's less important, especially intra-month, logically, but even intra-week, it does become less significant. Euro dollar is really going nowhere, isn't it? If you look at this 5-minute chart, and you can see that just because, you know, price is lower, price is higher than the moving average, price is lower, there's no direction here. Yeah, looks like one of those sleepy days indeed, Graham. Would have been better to stay in bed today, wouldn't it? But you never know. I would say that, you know, beginnings of, I mean, this is already the 28th of August. I would say things will start to slowly but surely pick up sooner or later. Summer should be ending. Of course, next week we do have Memorial Day in the U.S. But otherwise, things should pick up after the summer now. Although it depends on which currency crosses you look at, because the odd kept moving nicely. Not the euro dollar that much indeed. Let's take a look at that EJ. EJ is apparently moving a lot, so let's take a look at that. EJ had a nice bullish hour indeed, retracing that downside. Yeah, I do have a trend line here. I don't have, maybe I'll remove that trend line. I don't have the trust in that trend line to say that's one I would use at the moment. This upside, I think, still has a danger of finding one more downside to the bottom of that triangle. Especially if you look at the 1 hour world. It's quite a strong downside here. So one more break of this bottom to get divergence between the 1 hour bottoms, I think is likely. So if anything, there could be some shorts in here maybe. If we get closer to the 50, could be ideal. Maybe even here, this could be it already. You see, the only thing is that the 1 hour is not confirming it. There's no 1 hour price action signal there that would confirm that bearishness of mine. So probably would wait for that 1 hour world to give some signal. Either if it's moving 4 hours sideways and doesn't break to the upside, that could be a signal that we're moving down, or if we get some push up to the 50 and wick off the 50. So let me visualize that. Move up, wick. That's one scenario. Or if it then goes kind of nowhere for a while and then starts to slowly but surely move down like that. All right, folks. Well, that wraps it up for today. Personally, just to give you a recap, I think the Dollar Cad, Dollar Swissy, Odd New Zealand, Euro New Zealand are for me the most interesting at the moment. So I'm keeping especially a keen eye on those. Now, if the Euro and Pound would move into the zones that, especially the Euro upside and maybe the Pound downside, because the euro pound is moving to the upside, although the euro pound is in a rising wedge at the moment. Depends if we can break out of that rising wedge. Would be nice for for that confirmation, but although those are not the most attractive. The yen's really not that interesting to me at the moment, just because they're in these major wedges, triangles. The EJ maybe one more move to the downside to the bottom of the triangle, the dollar yen too. If that will happen, I don't know. If it does happen, that could be maybe an interesting longs, though, mind you, that if the euro yen does move that down to the downside here, anything within this is kind of trading in the middle. But if we wait for this downside and get a bounce here at the minus 272, which is around 129.20, and the bottom of that triangle most likely, that could be a very interesting long-term upside. That could be the bouncing spot before the EJ goes to 135. Who knows? Who knows? Maybe not, but it's definitely a potential huge reward there. So I'm hesitant to trade it within this wedge and triangle, but if we reach the bottom of the triangle, don't forget that the EJ has had a major uptrend the first half year of this year. That could be the continuation signal maybe. Who knows? Could be a very interesting position for the dollar yen and euro yen. Other than that, euro odd, I could try to scale in, but depends. I'm already in that trade. If probably would want to see one more breakup and a bull flag, I would add on to it. But I'm already in that trade, so I will wait for the currency to move a bit further away from my entry zone, because anyhow there's still 200 pips to the upside before scaling in. Otherwise, I'm at break even. Just to give a recap, same for the pound odd and odd dollar. And I think with that said, we've made a summary for all of them now. So I hope to see you tomorrow. Looking forward to that. We'll take a look at intraday trading and focus on the euro and pound primarily. Hopefully there will be a bit more price action to work with tomorrow than on the euro and pound than the euro and pound have shown today, because that was very small movements as you've so far seen. If so, maybe we'll try to scalp, or otherwise the best would be kind of like a swing intraday trade we can catch. In any case, I wish you good trading today, first of all, and have a great day in general, and talk to you all soon. Cheers, everyone.